One of the best ways to keep track of all your cryptocurrencies is to use a hardware wallet. Many investors have been turning to hardware wallets as a secure way to store their coins. The Exodus hardware wallet can help you do this. Exodus offers both desktop and mobile versions of its software. The user interface is simple and straightforward and allows users to keep track of their portfolios and other important information. The desktop version also offers up-to-date market information, including 24-hour change and the highest and lowest balance. The desktop software also lets users calculate the profits they can expect to make on their investments. Users can download the Exodus wallet for free. The wallet is not necessary to use Exodus to purchase cryptocurrency, but it can add features to their wallet. The software creates a unique wallet for each cryptocurrency. Each wallet has a public address and a private key. This makes it easier for users to manage their crypto portfolio. There are also many apps for the Exodus wallet, which give users additional features. A hardware wallet is more difficult to use than a software wallet, but it's safer for you to use than a traditional software wallet. Some hardware wallets are USB fobs, while others are larger devices with LCD screens. Most hardware wallets come with batteries. The most important thing to keep in mind about these devices is that hackers can't access your private keys unless they get into your hardware wallet. The biggest problem with hardware wallets is that they're difficult to update, and some of them can be incompatible with hard forks. However, the biggest advantage of this technology is that it's extremely secure. Software wallets are another option, though they have many disadvantages. Software wallets aren't as secure as hardware wallets, so the fees that come with them are higher than on hardware wallets. Furthermore, software wallets have a much larger user base, so it's best to start with one that supports multiple cryptocurrencies. The Exodus desktop software is an excellent choice for those who don't want to invest in hardware wallets. The Solana wallet exploit has turned investors' attention towards the Solana hardware wallet. As a result, Ledger has announced a discount code for the Solana wallet, which is available until the end of the month. The discount code is valid on the Nano X and Nano S Plus models. However, the cost is not worth the inevitable upside. While the crypto market has recovered in the last 2 weeks, many signs suggest that the crypto winter may still be far from over. Regulatory onslaught has slashed funding, but one company is hoping to capitalize on that. Ledger, a crypto hardware wallet manufacturer, is seeking $100 million in fresh funding. It raised $380 million at a valuation of $1.5 billion in June 2021. However, it has not revealed what the new funding will be for. As a result, some cryptocurrency exchanges are vulnerable to hacks. For example, Bitmart lost $196 million in December 2021. It contacted blockchain projects affected by the hack and plans to compensate its affected users. While this incident may seem extreme, it is also worth noting that most hacks are due to human error or negligence. In many cases, hot wallets and exchanges use passwords to sign in and out of their platforms, which is less secure than a private key. Despite recent hacks, hardware wallets are still a better alternative to software wallets. Unlike software wallets, hardware wallets can withstand physical tampering. The Slope exploit, for example, allowed the attacker to send users' private keys to another party. This resulted in $4.5 million of USDC and SOL being stolen. These recent hacks, however, have encouraged investors to use a hardware wallet. The rise in Ledger hardware wallets has also encouraged investors to self-custody their funds. Besides using a hardware wallet, Munoz MC Donald and Gautier recommend being aware of phishing scams and online awareness. As a result, they are preparing for an influx of users. Hardware wallet providers are adding new features and improving existing ones to meet market demand. A recent announcement by Oculus allows users to browse NFTs in the market, including the new Wallet Connect integration. In the wake of the recent bear market, many people are considering hardware wallets as a way to secure their cryptocurrency holdings. One company that has taken this idea to a new level is Trezor, which was created in 2014 as a single-purpose computer. The company was originally called Piglet and was designed to be open source, which is the hallmark of Trezor's design. The wallet is designed to be completely secure, a major feature that will put many investors' minds at ease. Recent security issues have fueled the growth of hardware wallets. The recent hack of Slope, a mobile wallet application, exposed users' private keys. The attacker made off with $4.5 million in Sol and USDC. The hack prompted the company's CEO to recommend users transfer all of their funds to a hardware wallet. Since then, hardware wallet sales have skyrocketed. According to Philip Costigan, senior account manager for Ledger, the company has sold 5 million units of its wallets. While hardware wallets are not completely invulnerable, they are highly resistant to hacking attacks and are highly secure for long-term storage. In this year's Solana hack, users' private keys were sent to a third party. The attacker then made off with $4.5 million in Sol and USDC, as well as other cryptocurrencies. The hacker then used the Trezor wallet to access these funds. Despite the recent controversy, Trezor is one of the leading products for cryptocurrency investors. Its low price has helped many investors get accustomed to the security of the Trezor hardware wallet. With the lack of federal protections, the crypto industry is a risky endeavor. In the end, many investors may not get their money back, and the Cryptocurrency Exchange Act does not apply to investors. The cold climate of cryptocurrency has forced many new and seasoned investors to seek out hardware wallets to protect their digital assets. One such example is the case of Celsius, which declared bankruptcy just months after freezing users' funds. The company hired teams of experts to restructure under Chapter 11 of the U.S. Bankruptcy Code. As of June 12, 2022, Celsius owed its users around $4.7 billion in crypto loans, and the freezing of withdrawals was announced. At that time, the liquidation price of Celsius stock was just $20,300. One of the reasons investors turned to hardware wallets was the recent meltdown of Celsius. The centralized lending platform attracted scores of clients by offering ridiculous interest rates, and then suddenly halted activity. The crypto market experienced widespread ripple effects, and Celsius's decision to freeze platform activity was the result of its own risk management framework, designed to stabilize liquidity and protect assets. Unfortunately, Celsius isn't alone in its current state. During the winter, temperatures plunged below 0 degrees Celsius. The resulting crypto meltdowns forced investors to switch to hardware wallets. While many of these wallets are resistant to physical tampering, they're not impenetrable, and many users are still hesitant to invest in them. The good news for them is that many of the hardware wallets have low cost and high security features. A recent cryptocurrency withdrawal freeze by ZipMix and Celsius has caused major ripples in the market. Attempts to stabilize the market's liquidity have resulted in numerous crypto users being unable to withdraw their digital assets. This latest meltdown has reminded many of the sage words of advice in the crypto trade: anonymous users must keep their digital assets safe at all times.